James, we did see a pretty flatty session for the market, only up by 0.1%. In fact, if we have a look at the volumes, a very lackluster day, less than $3 billion worth of stock being traded. All the action seemed to be offshore, so we're watching the Japanese market and the Chinese market very carefully. The big thing that was happening around the region was Kuroda actually speaking, and he was talking about the sales hike, that the Japanese economy could handle it, and so Japan is really planning a sales hike of up to 8% by April and then 10% in 2015. He was saying that the debt repurchases that they're making, they're to enable price stability rather than to finance spending. So as he was speaking, we did see the Japanese market losing ground, Japan down by 2.7% and China down by 1.8%. On our market, it was really the banks that held our market up. We saw a gain of 0.5 to 1% for the big four banks, and the staples also doing well. So all up, it was really defensives in favour today and growth being sold off.
This week, that have the potential to move markets a little more than what we're seeing at the moment, get those volumes up?
We'll see some production reports start to filter through, but really it's going to be pretty quiet ahead of earnings season, which kicks off next week. And really, I guess the market a little bit jittery on what can come out of earnings season. Potentially some more write-downs. We have seen some write-downs being announced through these quarterly reports coming through from the resource companies. But the key really is to see whether we are going to see earnings upgraded or downgraded or staying around the 6 to 7% growth that the market has as consensus for growth in terms of earnings this financial year. So just watching those numbers very carefully, and that's really because the last 3 years we haven't seen earnings growth on the Australian market. Earnings have really been dragged down by the fall that we've seen in commodities. And if we have a look at some of the main themes which have filtered through the Australian market this year, we're still struggling with a pretty sluggish Australian economy. We're still struggling with lower commodity prices. But I guess on the plus side, we've also seen a falling Australian dollar, which should have a positive impact for some of the companies.
The shares actually, I should say, down 1.4%. But that's despite, general sentiment being that they weren't bad numbers.
I don't think they were bad numbers at all. We did see production up high. In fact, quarterly production up by 53% to 2.2 million tonnes, and we also saw sales increasing by 80% to 2.6 million tonnes. So some good numbers coming through. I think the concern in terms of coal producers is the pricing side of things, and in this area we did see significant softness. So if we have a look at thermal coal pricing, I think it came in at $77 a tonne. That's down from $93 back in December. And also if we have a look at the coking coal side of things, that came in at $113.50 US a tonne this time round. But Whitehaven Coal is predicting that prices are going to fall down to $102 to $103 US a tonne. So if we have a look at the coal side of things, it's still tough. Australian producers are some of the most expensive in the world. We're not at the low cost end of the curve, so it's still pretty difficult in this space. Having said that, if you're investing in a company like Whitehaven Coal, you're really investing because you're going to start to see an increase in volumes coming through in terms of thermal coal. And this is all about the Maules Creek project. So this could be a positive for valuations in terms of Whitehaven Coal in the medium term. But for today, we did see the shares falling 1.4%.
And sentiment is not great, and we just keep seeing enough sort of write-downs and negative sort of announcements to keep perpetuating that negative sentiment.
We are continuing to see write-downs. It started with Newcrest and the $5 to $6 billion worth of write-downs, and then we heard from Oz Minerals today, $200 to $240 million worth of write-downs, as well as Evolution Mining looking at $350 to $400 million worth of write-downs. But having said that, while we have seen sentiment still quite bearish around gold, we've seen some fantastic moves in the last month. And I think the key when looking at these mining stocks is to choose the commodities very carefully and then choose the turning points carefully as well, because these miners are leveraged to the underlying commodity price. And even if we see a small bounce in the underlying, it does mean a significant bounce in the mining stock price. So if we have a look at some examples, stocks like Beedale, Northern Star, Oceana Gold, these are all gold miners. Just in the last 4 weeks, in the last 1 month, all three of these stocks are up more than 40%. So when the bounce does come, it is quick, it is strong, and it is on the back of the underlying gold price. So just having a look at those commodity prices and watching for that bounce, because there can be quite a violent move in terms of the miners when that bounce does come in the form of a rise in the commodity price.
Absolutely. Of a sale of non-core sort of an asset there. closed up almost 8%.
This is a key. As long as we keep on seeing asset sales and debt being paid down, this is going to be a positive for Trans-Pacific shares and also for the earnings profile of Trans-Pacific. The key driver of growth over the next 3 years are these asset sales and the decreasing interest expense. So watching to see more of these. In the last 12 months, we've seen about $250 million worth of realised proceeds that's gone towards paying down debt. So that's a huge positive. We have a look at what's happened today. Trans-Pacific has sold its commercial vehicles unit. This is where it imports high-quality, heavy-duty commercial vehicles and also distributes them. It is still left with two remaining businesses, and that's its waste and recycling business, which has been coming under pressure because of a lack of landfill volumes coming through, and also its industrial solutions. And that's really because we are seeing the industrial sector as well as the resource sector deferring on some of the maintenance because the catch cry in that particular area is cost cutting at the moment. So it is a cyclical business. It has been coming under pressure, but the fact that we are seeing Trans-Pacific paying off debt, a huge positive in terms of the growth of its earnings over the next 3 years. And if we see more announcements like this, that will continue to be a positive for TPI shares.